Welcome back to The Breakfast Show. Now, last week we spoke to our resident financial advisor about the importance of managing your money. And today we're going to tell you how to do it step by step.
A regular guest on our show, Yap Ming Hui, joins us once again to broach the topic of income and expense management, which is essential, one of the 8 pillars of personal money management. Good morning.
Welcome back to the show, Mr. Yap. Okay, so we all know what income is and we all know what expenses are, but is there a definition that you would like to share with us?
Yeah. Basically, income and expenses management is a process whereby we actually manage our expenses in such a way so that we can actually derive saving at the end of it. That's the ultimate purpose.
So, less out, more in. That's what you want, right?
Yes.
Okay.
Yeah. So basically, there are 3 rules I wanted to share today. Okay. Number 1 rule is that it's very important for us to know how much do we spend. Okay, every month. You'll be surprised. Some people don't even know how much exactly do they spend in a month. Okay. So to identify like how much we spend a month, I think it's important for us to do a budgeting.
Right.
Okay. To do budgeting, there are 3 steps. Step number 1 is to actually identify the expenses that we spend, which may include 3 major items. Fixed expenses, number 2, varying expenses, and number 3, occasional expenses.
Okay.
Now,
so fixed expenses would be things like rent, car payments, loan payments.
Yes, and then insurance premium that you pay. Then varying expenses would be like entertainment, petrol, food, grocery, and things like that. Then another thing is occasional. Occasional would be like, say for example, holidays, something like car maintenance. Okay, so these are your occasional expenses. So the step number 2 under the budgeting is that once you itemize, total up all the expenses you got, what you need to do is to actually deduct that from the income menu. Okay. Step number 3 is for you to find out whether you actually have a saving at the end of it.
And so from the last time we spoke, you told us that your savings per month should be at least 30%. Correct?
Yes. I'll share with you more about that. Now, so the idea is that if we discover that we don't have saving, what we need to do is figure out is how do we reduce the expenses, how do we increase the income. So that's the first step, knowing how much expenses we got. Okay. Now, ideally, I think rule number 2, we want to talk about like income. We need to actually save before we spend. I think if you all learn accounting and finance before, I think you should know that income minus expenses equal to saving. Right? Okay. Right.
Last I remembered.
Last we checked.
I'm afraid
we're in the negative.
I'm afraid it's no longer right anymore. Because the truth is, for now, income minus expenses equal to no saving. You know why? Those days, when we had expenses very little, incomes minus very little expenses, then you have some saving. But nowadays, our expenses is so much. And just look at whatever we put on the TV advertisement, there's so much that we can spend on. So if you just try to actually have a saving at the end of expenses, chances are, I would say, you don't have. Okay? So now, what I actually advocate, if we are really serious about achieving financial freedom, what we need to do is that we need to minus saving, from the income, so that after that only we spend.
Okay,
so you reverse the process.
Yes.
So take out whatever you want to save first, then budget from there.
Yes. Because the idea is, the advantage of doing this is that once you actually allocate your saving from your actually income, just like income tax department, they always deduct your saving, this income tax payment at the beginning, because that will make sure that you have money to pay.
Okay, now what form of savings would you recommend? Do you mean just like savings like the old traditional way? Take the money, put it in a savings account and just leave it there?
Yeah, of course, I think whatever we did, the first step what we talk about today, we just want to focus on making sure there's a saving first. Okay, then in the coming episode, we will share more about how do we invest. Okay. So just now I think Joe actually asked me about how much should we save. Now, remember those charts I showed you before? Now, if you got a holistic financial plan, you'll be able to know whether you're supposed to save 25%, 24%, or whatever percentage. Then you save according to that. Okay, you minus this amount out from your income. Number 1. But sadly to say, I think 99.9% of Malaysians don't have that holistic plan.
Right.
So when you don't have a holistic plan, I give you another kind of rule of thumb kind of suggestion.
Right.
I would say, if you contribute to EPF,
Yeah.
okay, your income will contribute to EPF, you will save 30%. Save 30% of your income first, okay, then you'll be on a very secure way to achieve financial freedom. If you don't contribute EPF at all, now you're self-employed, I don't know, like you, Joe, no, I think it's important for you to save 35%.
Right.
Then you'll be in a more secure position to go to financial freedom.
Because also in our past conversations, you've said that the EPF alone is not enough for you to achieve financial freedom when you retire.
Yeah, and that actually 30% actually is actually inclusive of the EPF.
Right.
So if your EPF actually is like 11%, then you need to actually add in another 19%.
Okay.
Yeah. So the third rule that I'm talking about here is to provide emergency cash, because we cannot assume those income that we make every month. Number one, we will continue to be employed. Number two, we may not be receiving income every month. You know, sometimes we will have some problem receiving the income. So when that actually happen, you have still expenses, isn't it?
Yep.
Your expenses will not stop, say, you know. So for that matter, you need to actually have at least 6 months. 6 months of your living expenses to provide as an emergency cash to take care of this situation.
Okay.
Yeah.
6 months.
Yeah.
6 months buffer.
And these 6 months of living expenses, I would suggest you don't invest it. Okay. I would suggest you put in
That's just cash. You need
cash,
as cash.
saving account. Okay. Even though like a fixed deposit account, that'll be fine.
Yeah.
Okay. But leave it there for emergency. Don't invest it.
Okay. Okay.
Yeah.
All right. So now you talked about tracking expenses.
Yes.
How would you go about tracking expenses? Like keeping every receipt or remembering everything you spend?
It's all 555.
Yeah, 5 books. You know, triple 5 books and write down everything. I mean, what's the best way? Because I mean, it's quite a lot. I mean, if I'm going to buy like a loaf of bread and then write it down, that's quite a lot of work to go about. So what would you recommend?
I would recommend actually two major ways. One major way, of course, we spend according to our credit card. You know? So the credit card company actually somehow or other help us to actually record down those items that we actually spend. Then another part of it, like grocery, buying bread, paying for movie tickets. Then some of these things I would suggest that we provide a petty cash. Say for example, we actually allocate that you spend on this miscellaneous item, say 2,000 per month. So then you actually allocate your budget of 2,000. Then you spend within that 2,000 that you allocate. Then you know that these miscellaneous expenses fall under the.
So again, in a sense, it's doing it reverse in the sense that you don't make note of your expenses, but what you do is you actually give yourself a budget first, and then take the money out of that budget to spend on your different, you know, especially when it comes to varying and occasional.
What about for people who have varying incomes, like every month to month, if they do the business or even self-employed, you know, freelancing? How would they budget? Because like 1 month I could have a very good month, the next month I could have, you know, not such a good month, and then following, you know, it might go up and down.
So for those people who have got actually varying fluctuating income, I think it's very important to have a yearly budget. You have a yearly budget at the beginning, okay, and then for that matters, you know how much income you're supposed to make, how much expenses supposed to be. Then from there on, you know how much savings you should be provide for. So whenever you have opportunity, that for example you're supposed to save 30,000 a year, you actually try to push your money into the 30,000 there first. Then the idea is that even though you may actually find quite strain, in certain months, but still you have to live with that. So the idea is to spend whatever that you have provided for saving.
Let's just go quickly back to the 6 months buffer that you spoke about. But most of us have the question, how do we achieve a 6 months buffer if your expenditure and your income doesn't vary from month to month unless, you know, you strike 4D or the lottery or, you know, something like that?
Yeah, so I think that's why the idea is that when we want to actually spend, okay, whatever actually income that we got, we need to really understand how much to really spend, okay? Because a lot of time when we don't know how much we really spend, okay, we will not be able to plan for actually a saving, okay? Because the idea is we really want to actually accumulate 6 months of living expenses, okay, as an emergency cash. We must somehow actually spend less what we make. Like what you say, if you do not know how much you make, you don't know how much you spend, at the end, you end up
broke.
Nothing at the bank.
Right.
So if I were to summarize it, I think there are 3 rules of money management. Okay, income and expenses management. Number 1 is always know how much you spend. Number 2 is to save before you spend.
Right.
Number 3, provide for emergency cash.
Okay.
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 And you can learn a lot of these things at an upcoming seminar that Mr. Yap is going to hold. Would you perhaps quickly tell us about that, Mr. Yap, on the 16th and 17th of October?
Yes. This is, I would say, the first comprehensive money management workshop that we got. Because I think in town, we got quite a number of workshops talking about making money and how to make more money. But nevertheless, we workshop to talk about what do you do? How do you optimize the money that you really make? So in this workshop, I'm going to share about 8 pillars of money management, okay, and talk about 66 strategies as well, how we can optimize the money that we already make.
Right.
Yeah.
Cool.
Fantastic.
Yeah, so for more information, you can log on to his website, www.yapminghui.com, or call 012-3900-048.
You can even SMS your questions, and that number is 012-754-1698. And you can send Mr. Yap an email at enquiries@yapminghui.com.
Yeah.
Thank you, Mr. Yap.
One point for me to share before we get
Please do.
I always want to share one point is that I think we all need to remember smarter you, smarter money management. We cannot depend on financial institution. We cannot depend on somebody else to help us to manage money better.
That's true.
Right.
Okay, we need to manage our money. We need to equip ourselves better. So, smarter you, smarter money management.
Great.
Smarter you,
Thank you
smarter
so much,
money
Mr. Yap. And of
management.
course,
Thank you, Mr.
those 3 rules very quickly. Know your expenses, make a budget. Number 2, deduct your savings first. And number 3, have a 6 months emergency fund buffer.